Hey guys, welcome back to another video. Today we will go over how to trade higher time frames, also known as swing trading. So without further ado, let's get straight into it. So when we start off, we want to start off on the weekly time frame. And the reason why we want to start off on the weekly time frame is because we want to have a good picture of price action in terms of what's going to happen in the next 3 months, next 6 months, and the next year. So as an example, we can have a look at this area over here. So we know that price has impulsed up into this area. We have some sort of supply area here, which we can see price reacted to. It pushes down from it, comes back up. We get a reaction from this supply area again. And then as we can see for the next year, we have been pushing down. And it's always good to look at this because we want to know what price is going to do in the next 3 months, 6 months, and a year, like I said before. But we do not want to focus on this time frame too much because the most important time frame is the one we're going to go over next, which is the daily time frame. Okay, so now I have the daily time frame up. Let's go over it and let's see why it's the most important time frame. The reason why the daily time frame is the most important is because it gives us an intraday view or a daily bias or daily direction of where price wants to go when we want to take a trade. So let's just focus on this area over here for now, and I want to go over why the daily time frame is so important and how it's going to help us understand where price wants to go. So if we have a look over here, we can see we clearly have a supply area. So let me just highlight that very quickly. Now in this area we also have a resistance, right? Because here we have a support, and now we know that this is likely to turn into some sort of resistance. And now we can see we have a supply zone and we have some resistance. Now the reason why the daily time frame is so important is because as we can see, when price comes into this area, which we know it should come towards, we start to get some choppy price action. And this tells us that taking a trade from this area when price is choppy means that swing trades are not likely to be ready to move yet. And in terms of the intraday time frame, price is going to be choppy. So we're not really going to get movement in one direction, we're going to get movement in both directions, as we can see from over here. Now what we can see is we get this choppy price action, price coming into this area, rejecting it strongly, we come back up, we get some sort of mitigation of a lower time frame supply zone, and then we move away. But the important thing I want to highlight to you is after this candlestick here, which is such a strong rejection, breaking support levels and breaking previous structure, we clearly have the next candle that continues down, and then this candle that continues down as well. We can expect this from one key thing that we need to learn about, which is candlesticks. So these candlesticks here, for example, this one will be a shooting star, and after this we know that we're getting a very strong rejection from this area and price is ready to continue down. So candlesticks will play a very important part in determining the daily direction and daily bias. And from these candlesticks, we are able to understand whether price is going to reject an area as it does in this candle, or price is going to continue as we know from these candles here. So now let's move on to the 4-hour time frame. So for the 4-hour time frame example, as you can see, I have used the bar replay tool, and we'll go over why I've used it very shortly. But let's start off with why we use the 4-hour time frame. So the 4-hour time frame is quite a strong time frame to use. It is a time frame we can trust, and it's the time frame that we are going to use to draw our main structure. Let's start to do that. In this example, we can see that we have a low here, and then we have a higher high, a higher low, and we can see that price is clearly reversing from this previous structure here. But we want to see what price can give us. Obviously from the daily time frame, we know our bias is down, but let's just continue with drawing this 4-hour structure. We get another high high here, high low, another high high, a high low, and then another high high over here. So we clearly see we have this structure that's moving to the upside. Now what's very important, and the reason why I stopped my bar replay tool over here, is because we've actually broken structure. Now this is structure we can trust. A 4-hour close when we're looking for swing trades or higher time frame trades, this is something we can trust. So if I mark this out as a break of structure, now this is very important, because now what we're going to be doing is we'll be looking for areas to sell from. When it comes to dropping down to lower time frames, what we want to be doing firstly is highlighting 4-hour areas of interest or order blocks. So I'm just going to highlight these as supply zones. So we got one over here, which is very clear, and we have one at the extreme over here, which is also somewhat clear too. So now if I move this to the right, let me just label that supply zone. So we know that there's 2 main supply zones that we can look to take a trade from at this point in time. So far we've used the weekly time frame, which are telling us we're moving down. We're using the daily time frame, which is also give us an indication that we're going down, but I'm going to tie everything together towards the end. And the 4-hour time frame was moving up. We can clearly see from the 4-hour time frame we have a massive downtrend, and so this break of structure is something we can look to take a short trade from. How do we integrate the 1-hour time frame and the 15-minute time frame? So it's actually very easy. Once we have found areas of interest or points of interest where we want to possibly take a trade from on the 4-hour time frame, we then use the 1-hour time frame to enter, or the 15-minute time frame to enter. Now there's 2 ways we can possibly enter. So we can enter on the 1-hour time frame, which means we are taking a risk entry. Essentially that means you are setting a pending order, as an example, like from here to here, and you're going to target, let's say, a low or something like that, or whatever risk reward you have as a set one, and that's your trade. Now with a confirmation entry, which is on the 15-minute time frame, is basically you're going to watch price come into a supply zone, and then when it comes into the supply zone, you want a reaction which causes a breaker structure, and then you're going to take the trade from around here and you're going to take it like that. So that will probably increase your risk reward, which is fine, which is something that we probably prefer, but it also means we are likely to miss trades because sometimes price will come into this area and just run away from you without giving a confirmation. So let's have a look at these in a little bit more detail. So if we go to the 1 hour time frame, and let's have a look at how we could enter these trades. With a risk entry, we know one thing for sure. This is going to be a lot more riskier because we don't know whether this zone will get respected or whether this zone will get respected. But what we can do is set limits and see which one gets respected and which one doesn't. Let's go for it. Let's set this one like this above here, and then let's say we target this low, so let's put that there, or we set a pending on this one, stop just above here. Let's say we target the same area. Now obviously we can see we have a higher risk reward, which makes sense because of the zone being at the extreme. And let's see what happens when we play price action. So we can see price instantly violates this one. So this one would have resulted in a loss straight away. We'll have a look at what happens here. So now what we like about this is price is pushed up. It's created some liquidity. There's still an imbalance to be filled here, which means that this one looks the better. Okay, we're pushing down. So we still have liquidity. We've got now equals here. Okay, now we get some substructure, which is that 1 hour structure that looks like it's going to move up. And as we can see, we would just about get tapped in. So this zone should be moved down to here to incorporate this supply area here as well. Something that I didn't do. And as we can see, price would have triggered you in very nicely. And you can see you move away. Now, obviously with this trade, you can see that we would have taken a loss on this one here, but we would then go on and take a winning trade from this one over here. And that's how risk entries work. So in this case, we can see that a confirmation entry wouldn't have been given because price smashes into this area and then pulls away very quickly. And so as we can see, that's a good example of how waiting for a confirmation entry, sometimes we won't get the confirmations that we need to enter the trade. So I mentioned previously, what I would do is I would go over how this all ties together. If I go back to the daily time frame, we can clearly see that we are in this box. We had the supply area, price came in and rejected this previous support, now resistance, and we can see that this daily time frame structure plays out very nicely. So we can see that from the candlesticks, we are in a choppy consolidation period and we are rejecting this area here. Now dropping down to the 4 hour, we can also see that we have this 4 hour structure that's moving to the upside, and then we get that breaker structure. So now this is our indication, along with the daily time frame and the daily candlestick patterns, that we are now rejecting this area and we now have a structural confirmation in terms of the 4 hour. That means that there is a likelihood that this supply will get respected, and so price will be able to move to the downside. And now we also see that the move that broke structure over here has a supply area at the extreme, which is what we targeted. Obviously we refined it as well, and then we got tapped into the trade and we can see we get a nice trade out of it. So very quickly, in the previous example, we didn't have an example of using a confirmation entry on the 15-minute time frame, but let's just quickly go over this one just so we get to see that. So on the 4 hour time frame, we have a supply zone and we can see that price is moving down, creating lower lows on the 4 hour time frame. This is probably more daily structure, as you can see from here, but the 4 hour time frame, as we can see, was moving down, and now we had this push back up. We have a clear 4 hour supply area that price has already come into. Now if we drop down to the 15-minute time frame, let's see what structure we have. So coming in, we have a high, higher low, higher high, higher low. Now if I mark these out very quickly, like so, to there, and then here to there, we can clearly see we get a breaker structure right over here. Okay, and the area that created this breaker structure was this supply zone just here. So this would be where you'd want to enter your trade from. Now if I mark this out like so, move that to the right, and we enter on this area here with stops above here. So you're getting that swing trade stop loss of about 30 pips, and we know we've got massive imbalances down here, obviously target down there. And that's it for today's video. Thank you guys for watching. I hope this video has gone over all the things that you wanted to know about higher time frames. If not, drop a comment in the comment section below on things that you think I've missed out or you want me to go over. But just before we go, make sure to subscribe, give this video a like, and I'll see you in the next video.